Bitcoin versus the dollar. Every time you have a massive move, Bitcoin goes sharply higher. Has the banana zone been cancelled?
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul reveals insights on whether crypto will ever recover. This video covers his predictions, analysis, and market outlook. Let's watch them to uncover truth behind crypto's future.
Yes, I am an utter moron, and I will take that all day. However, the banana zone is a multi-phase affair and a multi-month and over a year affair. And those of you who expect number go up all the time are only remembering what the banana zone is at certain periods of time. Your number's not going up because you own a bunch of shitholds and you're like complaining. Okay, I get it. Let's go through this again for you morons out there. The banana zone starts. This is the banana zone in the box. We then have a corrective period. Look at this. Corrective period, corrective period, corrective period, corrective period. Does this look any different than this one? No. And then what happens? Banana zone phase 2. Banana zone phase 2. Banana zone phase 2. Then we have another corrective zone. And you're all going to be throwing your toys out the pram. It's all over. It's just like 2021 again. Blah, 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 blah. And guess what? We will correct. And it will go higher again. That's how the banana zone works. And you guys have to learn patience. I know I say this all the time.
Financial commentator Peter Schiff has recently claimed that it is likely the Chinese government sold its Bitcoin holdings back in January. Schiff argues that while some are predicting a Bitcoin arms race between the United States and China, the reality is very different. According to him, China is not interested in joining such a race, and is instead laughing at those who continue to buy what he calls digital fool's gold. His pointed remark, China is laughing at us for buying Bitcoin. We're buying digital fool's gold while they buy the real thing, highlights his skepticism. Adding to these claims, Ketyung Ju, CEO of crypto analytics firm CryptoQuant, reported that China sold 194,000 BTC, the tokens seized from the Plus token scam in 2019, later mixed and moved to various exchanges. Data from Bitcoin treasuries shows China is the second largest government holder of Bitcoin, trailing only the United States. Meanwhile, the U.S. recently established a strategic Bitcoin reserve using forfeited coins, while other major economies such as Japan and South Korea remain cautious about diversifying their reserves with Bitcoin. Market dynamics evolve.
NASDAQ, let's talk about equities. You guys are nervous Nellies. This is like one of the most bearish ever readings in the history of the NASDAQ. Oh my God, Trump and Scott Bessent and tariffs, and they're all going to make us die. And you guys, stop. You are all way too bearish. The percentage of stocks trading with a RSI of less than 30 is almost record territory. And guess what? Global M2, because the everything code drives everything, drives NASDAQ too. And you guys trying to sell the NASDAQ here are selling something that is perfectly priced for liquidity. And we've had these liquidity air pockets in the past. Liquidity air pocket is when liquidity is not rising, NASDAQ overshoots, it recorrects, comes back down to trend, and then follows liquidity. Remember, NASDAQ has a 97.5% correlation to global total liquidity, which is the index that we use on a broader basis. 97.5%. Bitcoin has an 89% correlation with global liquidity. Global liquidity, I wrote about this in GMI, and there's probably not much time to talk about it now, but is my preferred measure these days. If we go back to the early phase of the Everything Code, the balance sheet was the main thing. After the balance sheet use, we started using Fed net liquidity. Once people understood that the balance sheet was printing of money and debasement, they started moving to Fed net liquidity. Now, all of FinSwit understands Fed net liquidity, as does crypto Twitter. And so they're looking at a TGA and the reverse repo and all of this stuff. Meanwhile, the game has moved. The game is always moving, my friends. The game has moved to total liquidity in the US and everywhere around the world. Total liquidity includes M2. It includes net liquidity at every single major economy level, net liquidity, plus M2. And M2's largest driver is the dollar. That is what they're now doing, which means that they're pushing the monetary policy onto the balance sheet of the banks themselves. So, total global liquidity is the big one. M2, very useful number because it's a large part of it. Okay. NASDAQ and financial conditions way overshot. Financial conditions are going higher with a 6-month lead. NASDAQ undershot. I would not be surprised if it bounces. NASDAQ, all of you, there's so many people on Twitter who just hate technology. They hate the fact that the number goes up over the time. They hate the fact that there's a bunch of large companies who make money. They want it to be about small companies. They want it to be about value investing. It ain't so. This is the largest observable trend of our lifetimes, is the log regression channel in the NASDAQ. Get over it. We're here to make money, not fucking be a justice warrior. And here we are in the sort of correction phase that we get often in the NASDAQ to drive the type of returns that we get. About 17, 18% a year returns from the NASDAQ, and you get larger returns.
Bitcoin has been trading in a narrow range between $82,400 and $85,300 since mid-March. This stagnant behavior stems from a mix of unpredictable U.S. economic policies, shrinking liquidity, and conflicting technical signals. On one hand, bullish factors are in play. The Federal Reserve recently held interest rates steady and signaled a slower pace in balance sheet runoff, hinting at a looser policy ahead. Prominent voices, including President Donald Trump, have promoted pro-crypto policies, and institutional buyers like MicroStrategy continue to add to their holdings. Some analysts see these factors as building a foundation for a future upward move. On the other hand, bearish elements are equally compelling. Despite the Fed's dovish remarks, revised inflation forecasts and lower GDP growth expectations have raised concerns about stagflation. Bitcoin's brief breakout after the Fed meeting quickly faded, with prices returning to a narrow trading corridor. Liquidity has also contracted, as evidenced by falling capital inflows and a significant drop in short-term trading activity. Technical analysis reveals an ascending triangle pattern, where a decisive breakout above resistance might drive prices toward $91,965, while a breakdown could push Bitcoin down to around $77,635. Until a clear market direction emerges, Bitcoin appears to be caught between optimism and caution, leaving traders and investors waiting for a definitive signal to ignite the next move. Market participants are monitoring these signals, as the delicate balance between bullish optimism and bearish caution may soon trigger a significant breakout or breakdown, reshaping Bitcoin's trading landscape and sparking renewed investor interest. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.